the Fed just gave us some information from their July meeting. They just released their minutes, and after this happened, there was a dip in the market, a pretty drastic one that's very noticeable at least. I mean, this is not a 3% drop or anything like that, but we saw a dip. It returned a little bit of a V action, and now we're actually lower than we were when it was dipping. So what did they say? Well, they said, you can see here, the summary of the 27th through 28th Federal Open Market Committee gathered indicated that central bankers want to be clear that the reduction or tapering of assets was not a precursor to an imminent rate hike. However, some members preferred to wait until early 22 to start tapering. Some wanted it in 2021. So they said, looking ahead, most participants noted that provided the economy were to evolve broadly as they anticipated, they judged that it would be appropriate to start reducing the pace of asset purchases this year, not just in 2022. So the minutes stayed, adding that the economy had reached its goal on inflation and was close to being satisfied with the progress of job growth. However, committee members broadly agreed that employment has not met the substantial further progress benchmark the Fed had set before it would consider raising rates. So they said, addressing interest rate concerns, the committee members also stressed the need to reaffirm the absence of any mechanical link between the timing of tapering and that of the eventual increase in the target range for the federal funds rate. So obviously, there's some fear, right? They said, though, that this does not have to do with increasing rates. They've talked about this several times. They're not looking to increase rates anytime soon, but they will start talking about increasing rates, and they are looking at possibly tapering this year as opposed to next year. Now, what does this tapering mean if you don't remember exactly? Well, they have been buying mortgage-backed securities. They've been buying a significant amount on their balance sheet. You can see, let's see if I can find it here. They started to buy $40 billion in mortgage-backed securities and $80 billion in treasury securities every single month. That's a lot of money. You can see right here is when they started it, and there's been a large increase to the Fed balance sheet. I mean, it's very clear to see over the last 6 months they've been adding a lot. And this cannot go on forever. I kind of think of it as like caffeine, right? Quantitative easing is like caffeine. A little bit is good. It can definitely increase productivity. It can increase the price of stocks. But if you do it too long, if you just take caffeine consistently, you start to not feel so hot, right? If we continue to do this and continued forever, it wouldn't be good for stocks. It wouldn't be good for the Fed. It wouldn't be good for everyone. So there has to be some end to quantitative easing. Interest rates have to go up at some point. Balance sheet of the Fed has to go down at some point. And it might hurt, right? If you are getting off caffeine and you've had a ton, it might hurt you short term, but long term it is going to be better. So tapering, if you don't know, the quantitative easing policies are implemented by the central bank to stimulate economic growth. What is called a taper tantrum is when people or investors are quite worried about a downturn in response to tapering. So this could be negative for the stock market. I would assume that it will be quite negative when the tapering is actually announced. So I would expect that to happen, in the next year, whether it's 2021 or 2022. They said that they would give us advanced warning. That's going to be negative. Also, the fact is there's the future possibility of increasing rates. We know that, right? They've told us that they will increase rates. It's quite obvious that they're going to increase rates at some point, but when that will be, we don't know yet. So if they give us a date, that's going to be negative too. You can see stocks all these stocks were positive just a little while ago. All of them were up on the day. Now about half are down. These are just some of the stocks I hold in Webull. We still have stocks that are high growth stocks that are doing quite well though. So tapering won't necessarily push every single stock down. It will most likely push down the market. The indexes have been doing quite well, really, really well, near all-time highs or at all-time highs. a lot of these stocks, a lot of the small cap stocks are actually down a lot. So that's why I am still looking at investing in some of these small cap stocks. I haven't been buying as many stocks recently, but if we see more dips in the future from any of this and I see some stocks that I can buy on sale, I definitely will do that. Now, let me know your thoughts on this down below. Thank you guys so much for watching. If you guys want, there is a link down there to Webull or to the Patreon. Definitely check both of those out if you want to see what I'm buying every single day. Thank you, and I'll see you in the next video. Bye.